Hello, welcome back to Dukascopy TV. Today I'm joined in the studio with Peter Francis Friedli to discuss hedge funds. Welcome, Peter.
Thank you.
So, what financial and economic background should be considered when discussing alternative investments?
Well, I think really what you have to see now is that the global economies are moving faster, they are more complex and interconnected. And this obviously has a great impact on what's going on today in the markets and everything.
Okay, and what economic context is currently driving the hedge fund industry?
I would say I like to call it a bipolar inflation, because on the one hand we have inflation, which is due to the rise in prices of real assets such as agriculture and oil and imports. And on the other hand, we have devaluation that's continuing because of the financial institutions deleveraging.
And what are the hedge fund industry's current dimensions at the moment?
The current dimensions are, at the moment, they stand at 1.75 trillion US dollars with 10,000 funds. So we're probably going to see a lot of consolidation in the industry over the next 10 years.
And how are hedge funds performing right now?
Well, first of all, I'd like to add that right now, when we look at this last 6 months, that's a very short-term period, and probably it's too short to really take an approach of analysis as to how hedge funds are performing. Now, the first 2 months were with growth and then inflows. The last 4 months have been, unfortunately, without growth and with net outflows.
And who are the typical investors, and what type of characteristics are they looking for in investments?
The profile of the investor today, a typical investor is financial institutions other than banks. For example, family offices, endowments, foundations, pension funds, to name just a few. And this has had an impact on how the perspective is on hedge funds. These type of financial institutions are rather looking for a long-term approach, profile, time horizon, and a minimizing of risk.
And Peter, in your opinion, what is the most successful strategy in terms of maximizing returns?
The most successful strategy in maximizing returns, as we can see here, is one that takes into impact. It's a multi-strategy. I like to call it an all-weather approach. Okay. And what it takes into account are the 4 economic drivers, which are rising growth, rising inflation, falling growth, and falling inflation. With this type of approach, you can really minimize risk. That is, you are minimize it in terms of all different asset classes.
And Peter, who are the most successful hedge funds at the moment in your opinion, and what sort of returns are they making? Okay,
I would say that the convertible arbitrage are one strategy that is very successful today indeed. And one of the reasons for that is that the US Treasury is in fact selling short-term bonds and buying long-term bonds, and this is being called the Operation Twist. So, which in fact enables an arbitrage to be done between long-term and short-term bonds. The yield divergence in Europe, that is really a key issue now. I mean, that's bringing in a lot of profits to certain hedge funds. The overall volatility in both the bond markets and stock markets. The convertible is an ideal instrument for these kind of things, and that enables these hedge fund strategy of hedge funds to be able to outperform. This has in fact been proven by the index performance of the Credit Suisse Dow Jones Index of hedge funds, which has shown 4.69% year to date. One of the other strategies, which is also very well performing, is the global macro strategy of hedge funds. One of the reasons for this is, for example, the US Fed now is doing a Operation Twist, which in fact means that they're selling short-term bonds and buying long-term bonds to try and invert the yield curve, which now is inverted, which means we're in a recession at the moment. Another reason for this success is the divergence in bond yields over the European market.
Great. And finally, Peter, are you feeling bullish about the future of hedge funds?
Over the long term, indeed, because hedge funds are a key component to any institutional financial profile. They are a key component in their alternative investments, that is to say, combined with real estate and with private equity. I see definitely there's going to be further growth in the industry due to the potential that the industry is always having in terms of innovation.
Great. Peter, I really appreciate you coming to the studio today.
Thank you very much.
That is all we have time for right now, but I will be back later to look at the strengths and weaknesses of the US dollar. But for now, goodbye.